Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, Chief Technical Analyst with Sticky Trades, and we're getting right to work here as we come into the final minutes of today's trading session, Friday, March 1st. Now, if you look at the candle of the diamonds, this is the Dow Jones Industrial Average ETF. You can see that we hit my target from last week to the downside of 388.67. And it looks as though we're going to close with a bullish engulfing candle. So for next week, I think the Dow is going to go up to test this high. Whether or not we reach that high, we'll have to wait and see. But we have an upside volume increase right there on that bullish engulfing. So my upside target on DIA is 392.05. And that brings us to IWM. Taking a look here, we don't have a bullish engulfing, and we don't have an increase in volume. So this is going to be a little bit different. IWM, I'm keeping my downside target right down there at 197.41. Keep in mind that we are already at this resistance point from back here in late December. And if you take a look at the weekly chart, we are right here at a role reversal resistance line. This was former support, broken, turned into resistance. So we're in a very well-defined trading channel right there for IWM. So I do expect we'll see some selling pressure in the near future. And so that brings us to QQQ. You can see on the weekly chart we're still moving higher. It looks like the bulls don't want to let go of tech. But again, here we are minutes away from the close, and we do not have an increase in volume. So I'm going to do a two-parter here. We came really close to hitting last week's target, missed that by pennies, but I'm going to do a two-parter. I think we're going to go up just a hair there. Let me zoom in a little bit. So upside target on the Q is 448.18. Then I think we'll see a drop in volume, at which time the CCI is probably going to start to pivot. So this is more like a four-part forecast. And then I think we're coming right back down. So got a couple of targets downstairs here that are still open, but for the short term, downside target of 441.44 on the Qs. Looking at SPY right here, again, a green candle. I think we're going to go up slightly, keeping this downside target. So short term upside and then right back down. And I'm going to make that longer term target matching up with that low right there, 498.67. And we have a close coming up here in 2 seconds. There it is, the close of the market on Friday, March 1st. Now, if we go to the VIX, talked about this last week, we are caught still between two gaps. Gap to the upside, still an open gap to the downside. So for next week, remember I'm forecasting slightly higher at the beginning of the week for the S&P, which means we're probably going to come back down to fill that gap at 1301. This is an inverted hammer. It's very bullish. So again, a little bit of a downturn, and then my upside target on the VIX is still in place right there as we get that data box to pop up at 1581. Now, I want to talk about Bitcoin. You can see that we're starting to pull back. My shorter term target on Bitcoin is 57,571, which is the 50% pullback on the Fibonacci retracement. So I'm keeping that in place. Now we have two half signals on Bitcoin. See this? We have lower highs, and that's 2 days in a row. We have lower highs, but we still have higher lows. And so half signals are usually a sign that the short-term leg is starting to reverse. Now a pivot would be a lower high from today and a low low. I think we could see that right away on Monday. And if Bitcoin starts to pull back, we could see a little bit more of a rally in SLV, which brings me to SLV here. Look at that beautiful pop. Now, for those of you who are following me on X with the silver trades, particularly Spartan Trader here sent a message. AJ, I almost covered rent today with your SLV prediction. God bless you. God bless you too there, Spartan. And I got to tell you, SLV is doing very, very nicely for us. If you look right here, I have a price target set at 21.65. And what that means is that once silver gets up in this area, I'm most likely going to start selling out of 5% of my position, again, in an attempt to parlay that. I tend to do that, makes the position bigger over time. Every time I buy back more, I get a bigger position than I've ever had before. So SLV is working out very nicely. I don't think I've missed on a single trade there. If you want to follow me, go to X, type in hashtag AJSLV trades, and you'll see all the trades as they come up. I generally post my intentions before I actually make the trade so that people can get in ahead of me. And for those that are trading along or ghosting, they could follow along with the charts as I post them as well. So that's SLV. Now, keep in mind that when I put out price targets and forecasts, I'm using the 7-point trading checklist that I came up with for our members. Basically, what I do is I look at the type of candle, I analyze the volume, I compare the price to the moving average, I look for gaps, as you all know, and I look at the stochastic and also my very favorite CCI. And so we teach our members how to use that trading checklist. And if you'd like to learn more about what I do, we also have the Wealth 365 Summit coming up in just a little over 37 days. I'll put the link to this free event in the description page, and I'll be going over a lot of content in this very short webinar that's going to be combined with other speakers. So all you have to do is really put your name and email address in there. You don't have to put your phone number. It's optional, but it's a free event. Again, the link will be in the description box below. Now, looking at some of the big selling that's coming in with regard to the billionaires that are out there, Jeff Bezos has sold over $8.5 billion of Amazon stock. I talked about that last week, and Mark Zuckerberg selling out of hundreds of millions of dollars of Meta, Jamie Dimon selling out. And also, I found very interesting is that the Walton family, Sam Walton's family, who owns Walmart, are selling out of billions of dollars of their shares. So something is up. They obviously know something, otherwise they would not be doing this, even though we're in a raging rally here in tech and across the board. They're selling into this rally. In addition to that, this chart represents the amount of money going out of the market. This is transaction amounts. You can see that over $7 billion has come out of the market here recently. And if you look at the other times that that's happened, I mean, right here back in right before the COVID crash, we saw money coming out right here. And so that is also a telltale sign that we're reaching a top. So be really careful. Now, some people say, well, why are you taking long positions if you think long-term bearish? Because we're still going with the money flow. We've had some really good trades, as you have recently seen with SLV. We have other trades like SVRA. You can look into that. Our members are in that one. Alcoa, we did really well with natural gas and UNG. John Chow is trading that, one of our followers. He's doing really great. You got to follow the money. Speaking of which, this is very interesting. China freezes accounts of a quant fund after it sold or dumped stocks out. And they put a freeze on selling for this fund. And that's the only way Chinese market could hold their market up, is to restrict anyone from selling it. That's the ultimate manipulation in any market right there. Now, I had a nice chat with one of our VIP members who manufactures plastics, and he was telling me about how the cost of resin for him has recently gone up 20%. And they have to keep this in mind, that plastic, that includes any of the bread wrappings, garbage containers, you have anything plastic that's packaging your food, the cost of the resin, which is what the plastic is made of, goes up. And that's very, very inflationary. That's part of the producer price index. And this is a chart that comes from the U.S. Bureau of Labor Statistics. And you can obviously see here that we're in an upward trend. If you apply some of your technical analysis skills, you also see that this is a role reversal support. That works on any kind of a chart. You can find where resistance, once broken here, turns to support. So it looks like the price of resin is going to continue higher, which again is going to continue to push inflation higher. Now I'm going to make a bold forecast. This is for the record. And I put this chart together showing you that this is an 8-year cycle that we're looking at here. And back in 2000, we had a 38% drop in the Dow. Now I'm just looking at the Dow. The NASDAQ got hit much, much harder. And then 8 years later, the Dow in 2007 and 2008 dropped 54%. Now notice, this is a 8-year span between those sell-offs. And then we had another sell-off here 8 years later. That wasn't a major sell-off, but it was definitely something to keep an eye on. And what we're seeing now is an increase in the frequency of these sell-offs as we come from 2018, 19, and beyond. And so I look at this more like tremors in the market. When you start to see this increased volatility in price swings, that is something that cannot be ignored. Now, this is a monthly chart, and I'm just showing you how I'm coming up with this potential crash of 53% drop in the market. Number one, I'm forecasting this over the next 2 years, and I am basing this on the Fibonacci retracement calculator. So if I go back to the low here in 2009 and draw my Fibonacci's all the way up to the high, this is where you're going to find the Fibonacci pullback or retracement level. So to think that this cannot happen, I think, is a dangerous thing. Remember, we are taking long positions in a lot of the shorter term trades, and we're doing very well with that. 95% of the trades that we put on short term are bullish. But the reason I keep talking about the downside is to keep people in check with reality. A 53% drop is something that we've seen before, like we saw in 2008. But because the prices are so much higher, this 53% drop that I'm predicting will be much more devastating, obviously, because of the amount of money that will come out of the system. Again, this is to document this for the record. Do not fear it, embrace it, prepare for it. Remember, you can make money on the way down. Stick with sticky trades. You'll learn the strategies that we're putting out to our members, and so you could be able to relax, especially over the weekends, and enjoy that time with your family. Speaking of which, I just want to do a quick shout out to our youngest student, and that's Jackson. His father, Tim, told me that Jackson is learning about bullish and bearish engulfing candles and learning the difference between green candles and red candles. Jackson is 5 years old. And for all the parents out there, it's never too young to teach your kids about technical analysis and charts and all that good stuff that goes along with supply and demand. You can make a game out of it. They don't have to get involved with money, but if you at a young age start to teach them how the concepts work and tell them stories between, the bulls and the bears and how they're always arguing, and that will absolutely help them as they get older, because obviously they don't teach this in any of the schools, not in middle school, high school, colleges. They just don't teach this. So it starts in the home with the parents, embracing that and making it fun. And with that, I'll leave you for the weekend. Have a great time with your family, and I'll talk to you next week. So long.